Hello, welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us to talk all things market this week is Scott Brown with the University of Missouri. Hello, Scott.
Hello, Megan.
As we get things started today, let's talk a little bit about what's been going in the market so far. And I will say, as a disclaimer, we're speaking about mid-morning on Friday, so not too much trade activity has happened yet, and obviously we won't know how things close yet today.
Yeah, that's correct, Megan. If we look at cattle markets to begin with, we can talk about live fed cattle prices that are roughly $2 lower as we speak for this week. So weakness there. If we look at cash feeder cattle markets for the week, I'm going to call them steady to uneven as we sit here today. If we look at that October live cattle futures, so up $2.15 as of the close on Thursday, while the September feeder cattle futures contract was up $2.90 as of the close on Thursday. Turning to the beef side of the equation, the choice box beef price was down $1.25 this week. We talk about weakness in terms of ribs and loins and briskets, really leading what was a lower choice box beef price for the week. On the hog side of the equation, we were lower in terms of cash hogs, down about $2.25 through Thursday. That October lean hog futures contract was also down $2.15 as of the close on Thursday. The pork cutout value was down slightly this week, but not really changed much. We saw a little bit of weakness in a number of those components in terms of that pork cutout value.
Scott, as we talk about, I want to talk a little cash hogs for a minute. We saw processors push prices lower for a while. We've kind of hit, I don't know if we want to say hit a bottom or hit a point where everything isn't moving as much, because they've been pretty steady all this week. Is this kind of our new normal at this point?
Well, I certainly think markets on the hog side in particular have been searching for how far down did we need to go to move some of the product that's out there. And this week might start to be giving us some indication that we're getting closer to where that might set, at least here for where we set in late August. I wonder as well, as folks begin to realize perhaps some positives happening relative to Mexico, that also gave pork markets a little bit of boost here, on again, off again. Everybody's really waiting to see the details that we have, but I think all those things could be helpful.
Let's talk a little, really a quiet week for reports as we head into this long holiday weekend. Farm income levels came out this week. Any surprises as we take a look at the numbers from USDA?
Well, I think most important to what we got from USDA this week was a nearly $10 billion decline expected in 2018 farm income relative to where we were in 2017. So a much tougher financial situation for U.S. agriculture across the board. I don't think that's really new information as much as just confirmation that we're continuing to see 2018 unfolding as not as good as where we were in 2017. If we look a little bit at some of those livestock numbers that are available to us, livestock cash receipts are going to be about $176 billion both in 2018 and 2017, so virtually unchanged in total. Yet when you start looking at the components of those things, that's where a few things start to jump out to me. Poultry and eggs in particular is the category where we're up about $5 billion in terms of cash receipts in those industries. And those really help offset what's happening in cattle, hogs, and dairy, that all are talking about lower cash receipts for 2018 relative to 2017.
So really, in addition to what we've been talking a lot about this year so far, we need to continue to talk about that risk management and being able to work with your operations looking ahead.
Yeah, absolutely. You know, when you look back at a year like 2014, where cattle cash receipts were above $81 billion, and you realize that for 2018, we're going to be closer to $67 billion, that kind of decline just reminds us that it is much more important to think about how we use risk management in both cattle and hogs in particular.
Some of the other big news that came out this week, the USDA announced details of its trade aid packages. I think the biggest recipients of $4.7 billion in direct payments went to soybeans. As you look a little deeper, pork and dairy will also receive some direct payments, but beef will not.
Yeah, that's correct. If we look at pork in particular, I think we got $8 a head that's being suggested as the payment to pork producers, as well as 12 cents a hundred in terms of what would be an additional MPP payment, or at least paid on your MPP production history for those that have that. It is a mix across the board in terms of what individual commodities are getting. For a minute, at least on the crop side, we're paying on half of 2018 production with this first round of payments. So it's not everything that's produced in 2018. And I think administration's really signaling that as market conditions continue to unfold, they'll think about a second round of payments if that's needed. Cattle do not get a direct payment under this plan, although I do think we're going to see market purchases of beef from the marketplace to help cattle prices move higher, as well as I'm assuming we'll see some of the export assistance or I should say export market development being helpful to the cattle market as well.
Well, we're on the case or on the topic of markets and potential movers. Another case of African swine fever has been found in China. Do we get worried about how this has been contained within the country and some of how maybe that trickles down into other aspects of the global market?
Yeah, absolutely. We have to continue to pay attention. I keep reminding us that here in the United States, we have about 6 million head of sows today. In the United States, we've got about 45 million in China. So I think it's important just to understand that, we got half the world's production and consumption of pork occurring there. So as we get the fifth case, the question really comes down to, are they actually containing it? It seems like we've slowed a little bit this week in terms of new cases, or are we going to look up a few weeks down the road and find a lot more cases coming? Only time's really going to tell us that outcome. It's just a critical piece of the puzzle for where pork prices head, I think, going forward. If we were to talk about a major African swine fever outbreak in China, again, I think that could be really positive for U.S. pork markets, but it's just a little too early to be summarizing too much at this point.
Does the way their herds break down impact that at all as well? Just because I feel like we're seeing these farms and they're hundreds of head instead of thousands or tens of thousands of head. Is the way that their pork industry or pork market is structured over there different from ours?
Yeah, so I think you bring up a very good point, Megan. In a number of ways, the industry there is still got a number of smaller producers where we've consolidated tremendously as we went through the 90s and 2000s and talk about a lot of hogs and a few operations. Those same scale of operations do exist in China, but yet a larger proportion of what's happening in terms of production in China would be made up of farms that are much smaller than we might think of here in the United States.
Other big news this week, the start of a NAFTA agreement has announced, as we talk this morning, Mexico and the U.S. have come to an agreement. Canada is still at the table. How does that maybe impact the pork market as well here in the U.S.?
Yes, I think it could be really important. And I remind us, if we look at weekly pork export data out of the United States for a minute, the last data we have says we shipped about 69.47 metric tons of product to Mexico in the last week. That's about 2% higher than a year ago. And that being 2% higher might actually grab folks' attention here. But I remind you, it's at much lower prices that we moved that product. So these tariffs have been certainly providing downward pressure on pork prices. Such agreement that reduces those tariffs certainly is, I think, helpful to some perhaps strength in pork prices as we move ahead.
Definitely something for us to keep our eyes on as well. Really not a lot more for us to touch on this week. It's been a pretty quiet week as it relates to reports and markets as well. As we look ahead to the shortened week next week, what are we looking to report-wise?
Yeah, so we will see a monthly trade data out late next week, as well as a jobs report on Friday. And since we've taped early here today, we can talk about a restaurant performance index. It should be coming out later today. So a little bit of demand side information available to us, both from the international side as well as what's happening to domestic meat markets.
We look forward to talking to you next Friday. Have a great weekend and enjoy your last weekend of summer.
You do the same, Megan.
To have our weekly livestock market update delivered to your email box, visit our website, brownfieldagnews.com. You can click subscribe and you can ask questions and submit comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.